Let me bring you back to Singapore now at the Bloomberg New Economy Forum, and my next guest is speaking this year and of course has been to a number of these events over the last 6 years that we've been holding this forum. Bob Moritz is a global chairman at PwC International. Just trying to count back the years and how every year seems to be a theme of embracing some sort of instability, right? So, and I feel like I always ask you, how's sentiment? What are people asking you and what are you telling them to do?
Right now, Heidi, you've got a sentiment that's a bit muted. If you look around the world, no surprise as you look at the GDP numbers that are out there, when you look at the compression on margins, and honestly, everybody driving for market share capture because you're not able to ride the curve of growth that's embedded or being foreseen over the next year or two or three. Having said that, you see 2 or 3 parts of the world that are really opportunistic right now. India is one of them, and second is Southeast Asia. When you look at the combination of the upside potential there in terms of the rise of the consumer, you look at supply chain management being an alternative in those parts of the world versus a China plus one, they see a lot of upside. And as a result, you see corporates trying to think through where should I invest, how should I invest. As I think about that risk tolerance, it becomes really important to actually measure the risks versus the returns right now, and that's where CEOs are spending a lot of their time.
Yeah, so these are, newer, shinier markets. We know everyone loves India at the moment, and so they should for a lot of reasons, but does it counterweigh the risks and the downsides that we see in China? Not just the economic slowdown, but of course I've got to ask you about, the auditing regulation complications that we've seen.
Yeah, well, first off, when you look at the broader market, you've got to bring that balance from China into the mix. Everybody that's in China today is trying to rethink what does that look like going forward? How do I operationalize myself in China, and how do I actually give myself optionality and agility for what may ever come? And again, we don't have that certainty as much as we'd like to have at this point in time. But the upside in the region is still relatively positive. In Europe, you have a totally different situation in terms of what's happening right now. So each CEO is focused on what I'll call 3 things. How do I actually go after revenue as much as I possibly can? How can I actually deal with my margin compression and the talent game right now? Because you are starting to see restructuring and other aspects associated with how much talent do I have. And last but not least, where am I going to make my investments, my capital investments and the like. As it pertains to the audit business, we still see upside potential. When you look at it worldwide, it's a pressure point in terms of doing more for less relevant to the audit of today. But the reality is there's not enough trust in the system. And as a result, the question is, can the profession, so to speak, our profession, actually serve a role when it comes to not only financial information that's needed, but also non-financial information that's needed by the stakeholder community. And that's where you see rules and regulations coming into place. Europe has put a significant amount of regulation in place relevant to non-financial reporting. India has recently done the same, and worldwide, you're going to see some standards come in as well, which will create more cost, complexity, and uncertainty for organizations. And that's where we see the opportunity for ourselves to try to help organizations drive that value.
Bob, what about geopolitical tensions? It's great to see you again. Last year in Singapore, we're really focused on the war ongoing in Ukraine, and then we're talking U.S.-China tensions, and now we have another war in the Middle East. So how do you tell CEOs how to manage these tensions?
Great to see you as well, and sorry you're not here. Geopolitics is just icing on the cake right now because you have what I'll call the macroeconomic issues and the microeconomic issues. The uncertainty coming from the geopolitics just adds to the complexity. The advice we're sitting down with CEOs about is how do we think about scenario planning? How do you bring more agility into your organization? Because you can't predict where those geopolitical implications will come from. So what you want to be is best positioned to move fast, to take advantage of the opportunities or minimize your risks. That could be supply chain changes, that could be pricing changes, and that could be compliance with rules and regulations because of those geopolitical issues. So each CEO and management team are trying to think about that carefully and be faster in its decision making right now. And the ones that are fastest and more agile are going to be the ones that survive over the next couple of years and thrive as we look at the amount of change that's going to be coming their way.
And you just mentioned also China plus many others. In that sense, how much progress have you seen on friendshoring, nearshoring, or whatever we might call this?
Yeah, when you look at the supply chain issues that exist, you see actually CEOs coming back to the basics. Where can I get the right economics? Where can I get stability and certainty? Where can I get it more greener as well, which is equally as important as they think about their own reporting? And last but not least, how can I work with whoever's going to supply me goods and services to give me the data to make those quick decisions? Those 4 things are the key decision makers. What we're not seeing is onshoring, bringing everything back to the home office, so to speak. You are seeing multiple options being brought to the table. Yes, you see some nearshoring ongoing, but CEOs broadly are looking at multiple options now to have that optionality and agility that I talked about earlier.
What options does your business have in China? Is the worst of it over? Are you sort of getting confirmation of what the restrictions on foreign auditing and accounting firms look like?
No, with respect to China, you actually have a number of different things that are ongoing right now, right? The U.S.-China relationships actually brought it to a head where you had access to information for the regulators to actually inspect accordingly. So that's going to be open-minded, and it's going to allow for the inspections to happen. So that tension has decreased quite a bit. What is really more interesting, Haidi, is actually the reality of what the auditing profession is all about going forward. And where you see this happening now is regulators focusing more on inspections and compliance to make sure good quality audits are done. And second, what does the audit need to be in the non-financial space? Those are the two phenomena that we see on a worldwide basis right now that capital markets and stakeholders more broadly are really interested in.
Yeah, I want to talk to you about Australia as well. Almost 400 jobs announced to go this week. How much of this feeds into, I guess, a sort of post the tax scandal reputational rebuilding? Is the worst of that over, or do you see more challenges ahead?
The challenge we had in Australia was, again, unfortunate, not represented at PwC, nor necessarily acceptable. And we put in a number of different steps to move forward with that, with the transparency that the stakeholder group deserves and needs to see from us if we're going to actually regain trust. We feel like we've bottomed out now, and we're moving forward with that remediation. We've been very public with that. Relevant to the point on the headcount, on a net basis, PwC is continuing to increase headcount on an overall basis. We made some commitments 2 years ago with our new strategy to add another 100,000 plus on a net basis, not on a gross basis, but on a net basis. And you're going to see some ins and outs. What's happening is you're slowing in the deals market on a worldwide basis. So you may see some reductions there, but you're going to see some increases in other parts of the business right now. So net, we actually are very much still in the recruiting mode and the maintenance mode in terms of what we need from an overall headcount perspective.
In Australia, do you think the environment, government, regulatory is going to get a little bit tougher before it improves?
So you'll see two things happening in Australia. One is the continued investigations that are ongoing, and that's not just PwC, that's everybody now in terms of the profession and what's happening coming out of the hearings. And secondarily, you are seeing a relook at what has to happen around the profession and the ecosystem that is around it. And what I mean by that is, what do regulators do differently? What do preparers do differently? What do the auditors do differently? And what do the boards and governance committees do differently as well? And that's going to be ongoing for the next 2 years. Australia is going to take a look at what other countries did. UK, for example, and Europe clearly went through that over the last 5 or 6 years. Australia will be looking at that in the same vein.
Is a potential split of audit and advisory really kind of in the mix there for you? Is that something that you'd contemplate?
No, we've been very clear on this. We do not believe that a split of the businesses makes any sense. It doesn't enhance quality, and it doesn't make sense in terms of serving our stakeholders. We've been steadfast on the point of view. The multidisciplinary firm in scale makes all the sense in the world. We'll continue to look at our portfolio and trim around the edges, but holistically, we believe in the large-scale multidisciplinary firm.
Always great to chat with you, of course, especially here in Singapore. Bob Moritz, Global Chairman at PwC International.